Right. Hi everyone. Hi everyone. Hello, hello. Good to see all of you. This is sorry. This is Baby Bowen over here. So if you can hear Baby Bowen speaking, can you just type in BB? If you can hear Baby Bowen speaking, can you type in BB? Hi. Hello, Eileen. And let me see who else is here. Yes. Fantastic. Right, Kelly is here, Han Hok is here, Eileen, Rachel, Albert. Wow, a lot of familiar names. Kenneth, Luciana, yes, hello, Paley. Right, hi. For those of you who just came in, welcome to Market Watch episode 25. So I hope you guys are excited because I am actually very excited for what I am going to share with all of you tonight. So yes, for those of you who just came in, say hello to Baby Bowen. Okay, yeah, you can type in BB, you can type in baby, you can call me anything, right? Wow, so young again. Yes. Reverse aging. All right, so for today, this is going to be the topic. Okay, so today, the main focus, okay, is I will be sharing with all of you Paul's secret. Okay, this is actually Paul's investing nuggets. So for those of you who are not aware, okay, basically Paul is one of our co-founder in Ultimate Investing, and every single week he actually share one nuggets, okay, which is actually an investing articles, okay, that share basically in terms of his learnings, okay, as well as some of the strategies as well. So this is actually done on a weekly basis. So yeah, later I will be actually extracting some of the very powerful secrets, okay, very powerful sauce, and share with all of you over here in today's Market Watch. So definitely going to be very exciting, right? So make sure that you actually help us to like this video, okay, give us some love, and if possible, help us to share this out also. That will be perfect. Baby Bowen will be so happy, right? When we see, every time I see a share, I'll be very excited. Okay. Wow, we have 55 of you here right now. Fantastic. Okay, and the number is continuously growing. Great. Yes, so this is going to be the topic for today. Okay, and that is actually let y'all see the face a little bit more. Okay, so yeah, today we are going to talk about Paul's investing nugget. So for those of you who are new, okay, let me just do a quick check. How many of you here are actually pretty new? That means this is the first time or maybe the second time that you're watching this Market Watch. Can you type in new? If you're relatively new, can you type in new? That means you have seen me less than 3 times. If you have seen me more than 3 times, you type in O. Right? If you have seen me many times, type O. If you have only seen me less than 3 times, type new. Ivan, okay, confirm not new. Right. Just want to know if there's any actually new people who are watching this, because I see a lot of familiar names, so which is fantastic. Okay, I think every week, wow, I see all these people who are following Market Watch. Really happy that you guys are spending your Sunday night. I think especially Sunday night is a time where not everybody will be the most excited because why? Monday is back to work day, so Sunday night is supposed for you to actually have a rest early, so that tomorrow you can actually wake up earlier for work. But I'm actually happy to see that so many of you are actually watching this. Yes, new to baby face. Okay, I am seeing baby BW for the second time. Wow, fantastic, right? So I hope baby Bowen will come out more often. Okay, anyway, let's get started, right? So like I said, today this is going to be the key focus. Okay, so first of all, I am going to share with all of you about Paul's golden nugget. Okay, it sounds a bit wrong, but yeah, anyway, yeah, that will be the topic. And secondly, as usual, we will be talking about the short-term market direction. And last but not least, okay, let's look at some of the opportunities in the market, for next week as well. And of course, we are going to have our Q&A every single week. Right, and of course, very importantly, okay, since I will be sharing some companies today, I think very importantly for us to have a disclaimer, right? So whatever I share with you today is purely based on education purpose only. Please make sure that you do your own due diligence, all right? Even though it's, yeah, especially when it's coming from a baby drinking beer, I don't think you want to, you have to, you definitely have to do your own due diligence, right? So very, very important. Okay, and let me just make the thing a little bit larger. Oh, okay, I can be right at the bottom. Right. Okay, so let me share with you, okay, this particular investing nuggets coming from Paul. So this was actually extracted from week 43. Okay, it is called 3 tips from a full-time investor. So for those of you who are not aware, actually Paul, I think he became a full-time investor a couple of years back. Okay, he used to be from the corporate world. He was doing extremely well, generating very, very good active income. But one of the reasons why he actually decided to let go of such a good income is a bit contradicting to what a lot of people want. Okay, a lot of us, we love to travel around the world. But for him, he used to be a regional sales director, so he was traveling pretty much every single month. Okay, so most of the time he's actually overseas. So he realized that he's not really like spending enough time with his family, and that is one of the reasons why he decided to leave the high paying job. And of course, because of investing, that allows him to actually collect passive income, okay, and also allow him to become a full-time investor, generating profit at home. So the first lesson that actually Paul shared, 3 tips from a full-time investor. Number 1 is do not gauge your trading investing performance monthly. Okay, there are very, very important learning lesson over here. So you see, in order for you to achieve financial freedom, like what Paul mentioned, it is all about having your passive income to be more than your expenses. But one thing we have to understand is that your portfolio don't grow in one straight line. There will be months that the market tends to be better to you, and there will also be months whereby the market is having a correction, so it doesn't probably reflect well in terms of your portfolio as well. So for those of you who are overly focused on a month-to-month or even a week-to-week basis in terms of your portfolio, I think, no, I'm not saying it's a bad thing, but I would say that you have to understand that investing is a very emotional thing. So when your emotion is being affected, it will also affect the choices that you actually make, the decision that you actually make in the stock market. So in order for you to not have that kind of volatility, okay, so I think over here what Paul mentioned is, for him, he actually gauged his performance every 6 months, right? So overall, let's say over 6 months, he generated 20%. So 20% he divided by 6. So on average, every month he's generating like 3%. So that's just an example of how he actually look at his performance, not on a month-to-month basis, but every 6 months, he will take a look at the overall portfolio growth, and then he will determine, whether this 6 months is it something that is actually, below performance or above his average performance, right? So if you find that this is powerful, can you type in GN, golden nuggets, right? If you guys actually learn something from this golden nuggets, can you type in GN? And when you type that in, something magical is going to happen. Okay, something magical is going to happen. The golden nuggets will appear. Okay, so this is golden nuggets number 1. Okay, coming to the next one. Okay, so this is still in the same article, the same posting, right? The second thing that he mentioned is do not trade time for money. I think this is a very famous, I would say, a strategy or concept that is being shared by Rich Dad. Okay, Rich Dad Poor Dad, the author of Rich Dad Poor Dad, Robert Kiyosaki. So in short, okay, as you can see over there, there is this 4 alphabet, E, S, B, and I. E stands for employee, S is self-employed, B is business owner, and I is investor. So the whole idea is, in order for you to become financially free, you have got to find ways for you to be on the right hand side. That means either become a business owner or become an investor. And the key reason why you want to do that is because people on the left hand side, people who are employee or people who are self-employed, they are consistently exchanging time for money. Okay, we are constantly exchanging time for money. And you have to understand that each of us, we have limited time, 24 hours a day, right? So, and of course, I mean, while we are still healthy, we can still work, we can still exchange time for money. What happened if you, because of certain reason, you have to stop working? So the moment you stop working, you realize that the income also stop coming in, right? But don't forget, your expenses doesn't stop. Expenses still goes on, and in fact, it will continue to increase year over year because of inflation. Now, the whole idea of becoming a business owner is whereby you can actually hire other people, okay, to actually work for you. In that case, you are leveraging on other people's time to actually, instead of you using your own time, you are using other people's time. And whereas for investor, pretty much the same thing. Okay, when we invest in a company, we are actually part of the company. So we are letting the CEO, we are letting the management of the company that we invest in do the job. So if the company do well, basically we will also get rewarded by being an investor, right? So having said that, okay, that doesn't mean that I think a lot of people have this concept that, when you are looking at passive income, technically you don't have to do anything. If you ask me, I don't think it is entirely true. Okay, if you look at business owner, do they have to actually still manage the company in certain sense? The answer is yes. Okay, but in terms of the time that they spend is definitely a lot lesser. Same for investor. Okay, how do I know which company to invest in? I can't just anyhow pick. Not everybody have access to market watch as well, right? So of course we have to still put in maybe a couple of hours to do research, do some reading, right? And again, like I said, you still need certain time, but not as much time as a full-time employee. Hello. Wow, Crypto Turtle is here as well. Hello. Yeah, today baby Bowen is here. Right, and of course, okay, that was Golden Nuggets number 2. So today we have Golden Nuggets number 3, and that is capital appreciation versus capital preservation mode. Very, very powerful concept, okay, when I was actually reading this, okay, and that is where I realized that a lot of people are consistently overly focused on this thing called capital appreciation. Okay, not saying it is wrong, but you have to understand, okay, again, this is coming from a full-time investor. So in order for you to become financially free, first you need to build up your capital, okay, so much so that your passive income is enough to cover for your expenses, right? So definitely right at the start, while you're building up your portfolio, we should spend a little bit more time to focus more on capital appreciation. Okay, that means you want your money to grow at a relatively faster pace. Now, what is capital preservation? Capital preservation basically means that you are actually taking a much lower risk, okay, because your focus is no longer about growing your portfolio. Your focus is making sure that your portfolio remains the same amount, okay, and of course, grow at a much smaller pace. So let me give you a scenario. People who are in the capital appreciation mindset, maybe they'll be looking at 20% to 40% on a year-to-year growth. But people on the capital preservation, they would probably be happy with maybe 5 to 7% in terms of their portfolio growth every single year. So you can see these are very, very big difference, 40% versus 5 to 7%. Now, again, the strategy that you are going to use is also going to be very, very different. So we have heard of a lot of people saying that, you can buy dividend stocks, for cash flow, for dividends, right? But of course, we have to understand that dividend, which one do you think that belongs more? Is it more on the capital appreciation or is it more on the capital preservation? Personally, for me, I find that most of the dividend company, okay, again, why a company gives dividends is because they don't know what to do with the money, so they give you back. Okay, yeah. So in terms of the growth, usually we don't see much growth. As long as the company consistently give us the dividend, we are happy. So dividend company usually falls under the capital preservation mode. Now, what? So some people will say, but Bowen, I want to make 30-40%, okay, every single year, but they are putting their money into dividend stocks. They're like, a bit different. What you want and the strategy that you are doing is totally two different methods. Okay, so it doesn't synchronize. So I think very importantly, okay, like what Paul mentioned, okay, once you reach financial freedom, your investing mode may change to what I call a capital preservation mode. And in this mode, you will tend to take limited risk to get moderate returns. Okay, so I think this is very, very important. So first, you have to understand which stage are you at. Are you at the part where you're still aiming for capital appreciation because you want to become financially free? Okay, then your strategy should be, something that focus more on capital gain. And if you are already people in the maybe 50s, 60s, you are just trying to build a retirement portfolio that can continue to, sustain another 20, 30 years, then maybe in terms of the method that you'll be using, you should be focusing more on the capital preservation mode. Right. So if you guys are actually getting some golden nuggets, okay, can you just type in GN? Okay, I personally love this a lot. So let me show you the golden nuggets again. Right. So again, I think this is very, very valuable golden nuggets from Paul. Right. So these three are actually from the same article. Now, okay, I'm going to share with all of you another article. Okay, so this was actually written on week 47. Okay, called the Woke Value Investor in 2021. So what does the word woke actually represents? Okay, woke actually means waking up lah. Okay, it's like the value investor is finally waking up. Oh, let me, yep. Oh, okay, yeah, not blocking the words, So over here, he actually mentioned, okay, Paul actually mentioned that there are many different investing strategies. Okay, so for Paul, right, he is actually known to be a value investor. Okay, that means he loves to look for good company and he wants to buy them at a very sensible price. Okay, like in short, he want to buy good thing at a very low price. Okay, yeah, put it simply. Okay. So what happened is that, right, for 2020, year 2020, okay, like what Paul mentioned, if you're a value investor, probably you won't get to find many great company, okay, that falls within the criteria. Because why? Most of the company that falls under the standard valuation method, okay, you will probably feel that the company is overvalued. I'm not saying that there's no good company. There are a lot of good company, but most of them are actually overvalued. So this is what actually Paul mentioned, okay, that he actually learned, okay, as a value investor in 2021. Number one is value is in the eye of the beholder. Okay, so he mentioned over here, value can be a little bit subjective. Okay, so most of the value investing approach that value investor use are things like P ratio, price to book, discounted cash flow. So if you have heard of any of these things, can you just type in which one have you heard before? Which valuation method are you familiar with? All right. So again, okay, these are the standard valuation method that help us to see whether this stock is it trading at a discount or not. But as what Paul mentioned, okay, in 2020 there are hardly any stocks that are being discounted. So if you are using this method, okay, you tend to actually miss out a lot of opportunity. We also know that last year to this year, the stock market consistently is breaking all-time high. It is like a mad rocket lah, okay, going higher and higher and higher. Right. So he mentioned over here, value is important, okay, but one thing he realized is growth potential is key. Okay, so like I said, I think for every investor, this is something that we always constantly improve and grow as well. All right. So for example, in 2020, one of the most popular company is actually the SaaS company. Okay, again, SaaS company was created, with internet become more and more common, and with cloud technology become a norm, right? So that actually allows for SaaS company to be to actually appear, okay, during this particular situation. And of course, with COVID, everybody is staying at home, so it also create a rush, for SaaS company. And again, in order for you to invest into this kind of SaaS company, you realize that you cannot use the traditional approach of value investing. Why do I say that? It's because recurring income model is actually the key to this company. Okay, and most of them do not have long track record. Let me give you a scenario. So for example, in the past, okay, if you want to listen to music, let's say you love Jay Chou, you love, Lin Jinjie, you love, Backstreet Boys. In the past, you probably have to buy it at their album, right? And the album probably costs about $20. So over the years, I know in the past, you guys have a lot of collection, $20. So this is how you spend money buying music. All right. But nowadays, okay, how do you actually spend on music? Okay, you actually, of course, YouTube is one of them. Okay, let's talk about Spotify. right? So we can actually subscribe to Spotify, and there are so many music, okay, in Spotify alone. Now, but the thing is, you realize that Spotify don't collect $20 from you, okay? And in many cases, many of the SaaS company, they actually collect very, very small amount, maybe $5 a month, $10 a month, right? So as compared to the previous method whereby they sell records, they sell CD, and straight away they can collect a lot of cash. Nowadays, this kind of company, okay, they collect small amount, but because of the way the business works, they can actually reach out to a lot of people, okay? And it's all about monthly recurring income. So every single month, whether or not you are listening to the music, they don't care, okay? But you still have to pay the amount, right? And of course, with the size of database of subscriber, okay, this can become a very, very profitable business, okay? And of course, the cost of that is literally very low because everything is on the cloud. So for Paul, okay, so he actually modified the way he looked at, this kind of company. So he actually created, things like metrics like net dollar retention rate and even cash burn ratio. So these are some of the new terms that we can actually use to evaluate, okay, or rather to look at SaaS company, right? So, previously in our UI, okay, Ultimate Investing, we also have this thing called a 5-star checklist. But because of the way, like I said, nowadays, if you use the 5-star checklist to look at SaaS company, pretty much all of them will fail because many of them are new company, right? So Paul actually developed a new SaaS method, a new checklist, okay, just for SaaS company. Okay, so again, this is something that is very important. I think like what he mentioned, growth potential is very, very important. So that is also why personally I love Tesla. I think the growth potential is there. Okay, number 3. Okay, this is also something that Paul has realized, okay, in 2020, and that is to ride the momentum. Okay, so for example, we look at some of the very, very popular stocks over the last 1 year. Okay, you have company like Tesla, Etsy, Nvidia, AMD. So these are companies that has done amazingly well. Okay, amazingly well over the years. Over last year, okay, right? But again, if you actually use valuation or fundamental approach or the normal value investing method, there's no way you can actually invest in all this company because they are still pretty much overvalued, right? So that is why for Paul, okay, because one of our co-founder in Ultimate Investing is Ivan. So Ivan is actually a TA guy, a technical analysis guy, right? So that's where for Paul, we also learn from Ivan in terms of the technique to actually look for momentum stocks. So again, we don't look for any momentum stocks. We look for good company, okay, that are overvalued, okay, but having the momentum. Okay, I repeat, okay. So we don't go for lousy company, but then go and ride the momentum, okay. Lousy company, you cannot sleep well at night. So what we do is we go for good company that is overvalued. So buy right cannot buy right, okay. But if let's say a good company has got the momentum to enter, we can actually still enter, but you need to use the technical analysis knowledge to help you to enter into all these company. All right. So I would say that these are the few golden nuggets that Paul actually has written down. Okay, and of course today I just grabbed, okay, out of 52 different articles, I just grabbed 2 out of 52, and you can already get so much value out of this, right? So there are actually still a lot of golden nuggets. Probably next time I will actually share with all of you more, okay, from Paul investing nuggets, right? So that is what I have in terms of the company, in terms of the sharing for today. And of course, I also wanted to relook at some of the companies that I've shared with all of you about 2 weeks ago. So how many of you still remember these 3 companies? Okay, if you had invested into any of this company, can you type in the ticker symbol that you have actually entered? Right? Anybody have entered into any of this company based on the opportunity that I shared 2 weeks ago? If you had, can you just type in the stock symbol, the symbol? Anyone? Okay, if you have, you can just type it in so that I know that you have entered anything like Alibaba, New, or Facebook. Nobody enter. Okay, and then next time I don't share already. Okay, Then is very lucky. Out of these three, you selected Facebook. Okay, doesn't matter. Okay. Anyone else? Okay, Eugene say all three. Okay, that's great. Okay. Pei Li say new. Suddenly all type. Okay, Baba and Facebook. Fantastic. Okay, Jackson. Okay, this one. No. Okay. So personally for me, out of these three company, I went into Alibaba and I went into Neo as well. All right, fantastic. Okay, Facebook 9988. Right. So I personally went into Alibaba as well as Neo lah. All right. So as you can see, actually I shared on the this is my position. Okay, the date that I actually entered and the date that I actually exited. Okay, for those of you who are inside our Telegram, okay, you would actually know that I actually sold the position off on Friday. Okay, so Friday I actually sold it off. So for those of you who are wondering what Telegram is that, okay, let me put up the Telegram. Right, make sure that you actually join us. Okay, so this is the Telegram, t.me/ultimate investor SG. It is free. Very important. It is free. Okay, don't need to pay any $5 fee, $10 fee. It is free. Right. So on the 7th of October, I went in. Okay, so 22 I get out. So you can see it's about how many days? My math's a bit fail. 15 days. Okay, 15 days. Okay, the price actually went up about 16%. So like I said, Baba was really a very good run, okay, over the last 2 weeks. Right. So 16% on the chart itself. Okay, that means if you buy share, you'll be making 16%. Woohoo! Well done, well done. Okay, but for those of you who bought into options, you'll be even happier. Okay, wow, really what? 182%. Faster take money and run. Okay, so this is what I did. I ran away already. Okay, next. Look at the next company. Okay, Neo. Okay, Neo didn't run as fast as Baba. Okay, because Neo is electric car. So okay, actually electric car should be running quite fast also. But anyway, Neo, when I went in, it was at this candle. It has gone up very nicely. Okay, so you can see I use option and you can see I did a buy call. I buy call on the October 7 and I sell it away lah. Okay, that's why it's called a sell call. Basically, it's to sell the call position away, right, on the 22nd, right? So you can see the price jump is 63.71%. Okay, also not bad. For those of you who also entered, wow, congratulations. What are? Now, okay, actually I wanted to also share for the Facebook, not so nice lah. Okay, let me just quickly run through. Okay, this is Facebook. Facebook actually was very nice. Okay, you can see I think the one that I entered was around, suggested was over here lah. I think I suggested when it was around this period. Okay, when it was at the red color EMA 200 line. So from somewhere around here, you can see that previously it went up about 4-5%. So that was a pretty good run. And I was personally, I think there's actually more room to go up lah. Until, okay, something happened over here. Anybody know what happened to Facebook? Right, basically it's because of Apple. Okay, so the way Apple actually changed some of their policies that affect advertisement, dollars for most of the social media or ads related company lah. So for example, if you look at some of the company like Snap, wow, literally Snap. Okay, you can actually see because of the news that came out, Snap dropped 26%. Okay, 26%. I think there are quite a number of them being hit, like Twitter as well. Okay, Twitter as well. Okay, you can see Twitter was down about 4.8%. So everybody was hit lah. As long as you are doing advertisement and you have a position in the App Store, then you will get affected. So Facebook wasn't spared as well lah. Okay, Facebook wasn't spared as well. So it dropped 5%. Right now, back at the EMA 200 line. Right. So of course we have to continue to monitor and see, if it will continue to get supported at this line. But anyway, I think for Facebook, something very interesting happened. Okay, I heard lah. I don't know how true is it lah that Facebook is going to change name. Okay, anybody know what is the name that they're going to change into? Anybody know what name is Facebook going to change into? Right, very interesting. If you know, you can type it in. If you know, you can actually type it into the chat. Right, let me just continue. Okay, later I will disclose the answer. What name did Facebook change into? No face. Faceless. I don't know lah, Facebook. Maybe Face Encyclopedia. Okay. Anyway, let's look at the short-term market direction first. Okay, so I think I think I have mentioned. Okay, I think last week, after our chat with our crypto turtle, so I did a very short. I said that pretty much I think the market is going to be pretty bullish. So start looking for opportunity in the market. Okay, start looking for opportunity in the market. So last week, wow, very nice run, all the way back up. Okay, so again we are at a cross junction. Go up or come down. Go up or come down. Okay, personally for me, this is my feel lah. Okay, this is my feel lah. I think market always react a bit lag lah. So market will react, go down a bit, go down a bit, go down a bit, then suddenly boom, then fly up. Okay, this is my take. Again, please do your own due diligence. Okay, this is just sharing by a baby. Okay, so take it with a pinch of salt. Okay, this is the Dow Jones. The Dow Jones, you can see very similar. Okay, now it's at pretty much at all-time high lah. Okay, at the very strong resistance, which is the all-time high resistance lah. So let's see if it can boom on Monday. Maybe Monday straight away fly up. Then good news lah. Okay, Monday never fly up. Also don't need to be too sad lah. Okay, so let's monitor and see how it goes on next week. Okay, so I think next week, even if it does goes down, I think very importantly, right, continue to look for opportunity in the market. If you have stock that are at very nice support, or there's an entry signal, or there's a company that is undervalued, feel free to go in. Okay, feel free to go in. Okay, like I said, if you ding dong, maybe 1 week, then it will go up lah. So that 1 week won't make a big difference unless you're very short term. Okay, if your position is mid-term, long-term, 5 years, 10 years, don't really need to care about this. Okay, if your position is 6 months to 1 year, actually also don't really have to worry too much about this. As long as the position is okay to go in, just go in. If you're looking at 1 to 2 months or 1 month, okay, that kind of position, then yes, maybe you can wait a little while. Okay, so I hope this is very clear to all of you that what I'm sharing with you. Okay, like I said, this is weekly market watch, so I have to give you a short-term time frame. Okay, in terms of mid-term, I think it's still going up lah. In terms of long-term, like I said, I still see that the crash is probably coming. I don't know when, probably next year lah. Okay, so what are some of the opportunities? Okay, but anyway, I think just now the question was, Facebook is going to change name. What is the new name that they're going to change? Congrats to Jimmy. Yes, Jimmy got the correct answer. Wait, is it correct or not? Actually wrong. Okay, spelling error. Okay, Albert got it correct. Congratulations to Albert. Okay, yes, Facebook is planning to change name to Metaverse. Okay, Metaverse. For those of you who are not sure, why? I thought Facebook is such a nice name. Okay, why do they want to change to Metaverse? So this is actually the new direction that Facebook is moving into, and that is augmented reality. Okay, augmented reality. So what is augmented reality? Basically, it's just like wearing glasses, and then your friend will appear in front of you in holographic images. So I just want you to imagine now. Okay, now you're doing Zoom, right? Okay, you're meeting your bosses on the computer screen. In the future, maybe you'll be lying on your bed. Okay, you put on the glasses, and literally your boss can be sleeping beside you. Not sleeping beside you okay, but literally inside you will be sitting in the office, and you can literally, like, your boss is like, so you can change the image. Maybe you have an office table. Then after that, a bit like a land of NFT lah. Okay, think of it yeah, technically we all go into the virtual world Okay, we all will be able to appear in the virtual world, right? Just like NFT, right? So this is really the power of augmented reality. Okay, I'm sure you have watched those shows whereby they go into the virtual reality or augmented reality, then they cannot come out because they don't know which one is real, which one is fake. So that is what Facebook is moving towards to, and I believe that they pretty much already have the technology. It's just waiting for implementation. If not, they wouldn't have such a huge change of name. So if you ask me, Facebook got potential or not? Huge potential. Okay, can buy or not? Later we will see how. Now, okay, let's look at the opportunity that I have. Okay, number one, okay, I think I shared this not too long ago. Okay, actually I'm in now. Okay, I went in already. So I am a investor of Tesla. So my opinion is biased. Okay, right. But personally, for me, okay, Tesla has approached the all-time high. In fact, I think last Friday it has actually broken above the all-time high. Right now, this okay lah. Wow, this candle, this green candle, okay, is already above lah. It's already above. That means a current price of 909. This is the highest price Tesla has ever been to lah. Okay. Now, if you ask me, is there an opportunity or not? Okay, personally, I think there are a lot of opportunity lah. I mean, as you can see, Tesla has been hovering for almost 1 full year. Okay, before from the previous high lah, then it went down, so there's a lot of things being controlled and being how to say, it's like a spring lah. Okay, you press it long enough, right? Then the rebound is going to be a lot stronger. Okay, and of course we have seen that quarter to quarter Tesla has been producing really fantastic results lah. So again, the results will further squeeze the spring. So right now the spring is being released. So we are going to expect, okay, a huge run up lah. Something like somewhere in before 2021. As you can see, the price break the high and then just bam all the way. Okay, all the way. Okay, but again, like I said, if you are going to invest in Tesla, please have a very long-term view, because this is still a relatively high-risk company. Okay, or rather volatile company lah. I wouldn't use high risk. Okay, volatile company. So this is my personal take. If you have to invest in Tesla, give yourself a long-term view up till 2030. So buy and hold until 2030. This is what I would personally highly suggest you guys to do. Right? So this is for Tesla. Okay. So technically, anytime you can buy lah, because whether you buy here, 10 years down the road is not going to be a major issue. Most importantly is you got buy lah. Okay. Most importantly is you got buy. Now the next company, okay, or rather not company, the next is actually an ETF. Okay, so this is the Turkey ETF. So yeah, let's look at this company, okay, or rather this ETF. Okay, so first, if you look from a valuation perspective, this ETF is super undervalued, PE ratio 8. But remember, like what Paul mentioned, if you are using the very traditional method of thinking, okay, then you'll be like, wow, can buy like 8.33. Okay, but if you look at what happened to this company from 2019 all the way to 2021, it was ding dong, ding dong, ding dong, ding dong, ding dong. So previously it was also very cheap in terms of valuation. So cheap can remain cheap. Okay, and in some cases, cheap can become cheaper. So very importantly, but as you can see, it is being ding dong, ding dong, ding dong, ding dong. Then let's follow the pattern. Okay, let's follow the pattern. Right now it's at the very nice support area. Okay, so that is where I do foresee that it's going to bounce up again. It's going to bounce up again. But again, this one, like I said, it might take a little bit time. It might go down a little bit more, okay, before it jump up. So do give it around 3 to 4 months. This is the time frame that you'll probably be looking at. Okay, nothing too short. I probably won't be holding for over long, also like 1 year, 2 years. No, this is not the company, but 3 to 4 months. Okay. Right, so these are the two companies that I have for all of you, right? So that is all I have for tonight. So let me answer some of the questions that you guys probably would have. First question, why Keppel DC REIT keep dropping in share price even though nowadays we use internet due to COVID? Very good question. Let's look at Keppel DC REIT, okay? Okay, let's look at Keppel DC REIT. Actually, without looking, the answer I can give you is valuation. Okay, because previously it has actually gone up way too high already. Okay, way too high. So anything that go up must come down. Okay, so you can see, actually, if you compare to the past, where got dropped a lot, can you see this run up? So now the bigger the run up, the more you drop. Not say the more you drop, but then it's okay lah. Wait for it lah. Okay, one thing that I can share with you, well, this is top secret. Okay, but anyway, wait for the thing to start. Wait for the line. You can see all this line, right? Okay, think of it as centipede line lah. Okay, wait for the line to start turning up lah. Now you can see all pointing down, means that the trend will probably continue to go down. Wait for the line to reverse. Okay, wait for the line to turn up. That before you enter. I think it's also good because why? As the price drop, your dividend yield for this Kappa DC is going to increase, right? So those people that buy at $3.10, wow, they are very, very sad right now because they, the dividend also not that high. Okay, not that fantastic lah. Plus now capital loss, right? So anyway, people who invest into Kappa DCV, I can tell you a lot of them, they will just hold one. They will just buy and then just hold and for 5 years, 10 years, right? So those who cannot take it, they will sell lah. So wait long. Maybe a lot of people take the money out and then go and buy US stock lah, because US stock run a lot faster. Also possible. Okay, also possible. So I would say if it continues to drop, let it drop lah. But I personally think that there's good opportunity. I mean, I love this Kappa DC REIT lah. I think cloud is going to be going to remain high demand moving forward. Okay, next question. Fastly will continue to go up. Wow, how you know? I also don't know. Okay, yeah, there you can see. See just now the secret, right? See, wow, going down. Wow, now see starting to curve up. But you don't need to kanchong lah. Wait for a while more lah. Wait for all three to point up lah. Then you go in also can. Yeah, but fastly looks like it's going up lah. But again, nothing is confirmed. So let's continue to monitor. And don't forget, earnings is coming. Okay, earnings, anything can happen. So 2nd of November. Okay, about one more week. Yes, yeah, like what Jackson, Kappa DC had ran too much and overvalue. Okay. See, Luciana say, yeah, I'm holding. Yes, then will you sell or not? You say, no, I won't sell. Just hold, just keep holding on. Capital loss, as long as I don't sell, I never lose money. Okay, what's your evaluation? Oh, I don't know what is evaluation, but anyway, let me take a look. What is this? Financial sector. Okay, this is the banking sector, I believe. Right. So yeah, banking sector actually is not that overvalue. It's not that overvalue. Okay, so I think I previously owned Bank of BAC lah, Bank of America. Yeah, and then I took profit lah. So if you ask me, I wouldn't enter now lah. Based on valuation, I think it is not cheap. It is not expensive lah. It is like not here, not there. Based on trend, I wouldn't enter as of now lah. Okay, if previously you entered, then I think it's good lah. Okay, but if you ask me, can enter now? Okay, actually the best time is somewhere around here long, when everything starts turning up. See, everything starts turning upward. Better to buy one. Now you're already like here. How much further can it go? Will it go to here? To be honest, a bit hard. Okay, to be honest, a bit hard. Okay, I mean, if you look at bank, if you compare, okay, let's say I use the most traditional method. If you look at Tesla, you look at bank. Tesla can continue to create more. I mean, the growth is extremely high. Like 50% growth on a year-to-year basis. Can we have the bank to grow at 50%? Okay, to be honest, bank lah, they are pretty mature. So maybe about 10-20% is pretty amazing for banks already, right? So yeah, I wouldn't jump in now lah. Disney go sideways. Let's take a look. Yeah, actually I did took a look at Disney, and I was wondering, should I share Disney? Yeah, I've forgotten why I didn't actually choose Disney lah. But yeah, it's actually at kind of trading in the zone lah. Okay, so let me check why I didn't go in. Oh yeah, because you can see, even if let's say I go in and then it comes up to this line it's only how many percent? I zoom in for you all to see. 5.8%. Okay, don't waste time lah. 5.8%. Look for more lah. Look for more. I mean, there are a lot of other opportunity out there. So this one 5.8%, and then start to come down again. The ROI is not there. Is Apple good to invest right now? Personally, for me, okay. Yeah, if you are looking at something relatively long term and stable I think definitely Apple is okay to enter Okay, again for long term. right? That means again, yeah, you can use the 2030 long, hold it until 2030, right? I would say that right now is actually a pretty okay price to enter. What about ARKK? ARKK. Actually, I also wanted to ask you, like, what about ARKK? Like, what do you want to know? Can go in or cannot go in? Yeah, basically it's trading in the zone now, so I wouldn't do much. In a way, the support is not also very obvious. It's just trading a bit sideways, so I wouldn't do anything for ARKK lah. So you have to understand that ARKK has a lot of holding in two companies. One is Tesla, one is Teladoc. So I think Tesla, I mean, I'm really invested in Tesla, so I don't really need to invest in ARKK. Another one is Teladoc. And Teladoc, as you can see, is actually still going downwards. Still going down, but seems like stabilizing down. But let's see if it will start to bounce up. Okay, but for now, I'm still monitoring. I'm not planning to enter yet. Is vaccine stock a good buy or not? Moderna or Pfizer? Like I said, I think it has gone up quite a fair bit. So if you ask me to go in now, I wouldn't go into any of the all these vaccine stock. It'll be like glove stock. Let me share with all of you glove stock, just for you all to know. Okay, what are some of the glove stock? Suddenly I forgot. I know Hatta Lega. I think this one is Malaysia. This one is Malaysia. Just to share with you, can you all see glove stock? Because of COVID, what from $6 jump to $20 over. Then now the fact is people still using glove? Yes, actually the demand is still pretty high, but because this is a bit over crazy okay, so now everybody starts selling so almost back to the original price, which actually I feel that looking at it right now, actually this one could be an opportunity coming up. This is from Malaysia. Okay, if you compare the price now to 2020 March, which is around the start of COVID, you ask me, has the demand of glove went up? Confirm yes one. That is 100% yes. Okay, even in the post-COVID world, I think that the amount of gloves that people use is still going to be still going to be higher. Okay. And again, like I said, COVID is probably not going to disappear anytime soon, right? So I think right now actually the price looks pretty decent. Okay, let me see it. Will Wells Fargo go higher? A bit similar to my take on previously on the XLF. I think it is not cheap, it is not expensive, but I wouldn't chase after it as of now. How about Baba HK9988? I mean, personally, I just exited just for you to know. Again, if you have not entered, I think Baba still got room to recover. Okay, if you haven't entered yet, okay, you can consider taking some position in. Okay, but again, if you already invested, okay, please do not add more. Okay, because you never know. The China regulation is still ongoing. It's still ongoing. How about CrowdStrike at sea? Time to take profit. Actually, taking profit, this one is a bit subjective because I don't know your time frame. Okay, so for example, let's say I give you an example. Let's say now I tell you, hey, Zhang ZZG, you should take profit. And then after that, right? Okay, very zun, very accurate. Okay, let me show you. Let me show you some scenario. Okay, let's say I am very accurate after I tell Zhang to take profit. So Zhang exited over here and then the price dropped down. So Zhang will be very happy and say, hey, Bowen, I treat you to Hai Di Lao because you helped me to sell my CrowdStrike at a very nice price. But 5 years down the road, okay, okay, CrowdStrike price went to $500. Okay, and Zhang, because after he exited, he never buy back again. So 5 years down the road, Zhang will come and talk to me. Hey, Bowen, you need to treat me Hai Di Lao because if I never sell, I would have made a lot more. But because I sold it away and never buy back, now I lose a lot of opportunity, right? So again, like I said, what is your time frame? If you are looking at short term, maybe I can advise you on a short term. But if you are looking at long term, then I don't think we don't really need to look at so much on the charting portion if you're looking at relatively longer term. Okay, I hope this is something that y'all can take note. Very, very important. All right. So when you ask me can take profit or not, I need to understand a lot of things. Like what is your time frame? What is your conviction in the company? Why do you enter this company in the first place? Etc. 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 Yes, thank you so much. Top Glove. Yeah, this is another glove company. You can see lah. Pretty much, I think it's going to be the same. Equally bad as Hataleka. Very similar lah. As you can see, go up, come down. Okay, any chance for Baba to go up? Wow, actually, this kind of question, I really don't know how to answer you. Any chance for Baba to go up? I think yeah, chance definitely got chance. What's the percentage? I don't know. Okay, sure got chance one. Sure got chance to go up. See, go up one time, go up two times, maybe we'll go up another. Okay lah. To be honest, I really don't know this one. You have to look at the company you have to look at the company itself for Blackberry, right? But I think Blackberry right now, I forgot what they are focused on. They are actually a very niche company right now. Okay, they are no longer doing. I think they are still doing the phone now, but the core business is actually on something else, which is actually pretty huge potential. Okay, pretty huge potential. Okay, yeah, BB lah, BB. Will oil stock keep going up? Already stopped going up already. What? Let me just show you. Okay, so oil, I think it has gone up quite a fair bit lah. So okay lah. I mean, to be honest, if you ask me, can continue to go up? Maybe can lah, but at almost like I don't know what's the current oil price. Oil price. At $88, I think the upside is limited lah. Okay, this is what I personally feel lah. Okay, this is what I personally feel lah. Because as you can see nowadays, right, I don't know whether you all realize or not, the last 2 weeks, right, a lot of things has actually gone up in prices. Maybe you can buy kopi, your kopi also increase in prices. You go Lazada, you go Shopee, everything increase in prices. Why? It's because of oil prices, right? So inflation is something that, the Fed is really very focused on inflation. Then with the oil prices going up, then inflation is going to be even faster. So I think the government, the Fed or the whole government is definitely going to do something about the oil price. They cannot let it go to $150. Okay, so maybe it can go to 100. I don't know, but I think the upside is limited. Okay, it's limited. So again, if we look at the risk reward can it go down to 50? Maybe also possible. Okay, what about Airbnb since the countries are slowly opening up? Okay, all this we have to look at numbers. We have to look at the financial of the numbers. Now you just tell me Airbnb again. Without the numbers, I wouldn't want to over analyze too much lah. Okay, I wouldn't be able to analyze too much, right? Yeah. Okay, yeah. So that's pretty much sums up all the sharing that we have today. Right, so if you have learned something from today's session, can you just type in 888? Can you just type in 888 if you have learned something from today's session? All right, so let y'all see the baby face once again. So that is basically all for tonight. Okay, so yeah, once again, thanks everyone for joining for Market Watch episode 25. Market Watch episode 25. So don't forget, next Sunday, we are going to have Market Watch episode 26. And next week, let me just share with you what I'm going to share first. Next week, I'm going to talk about a company. Okay, I'm going to go a little bit more in depth, a little bit more in depth into one company. Okay, that starts with the letter N. Okay, I start with the letter N and end with the letter, okay, the full name okay, of the company. Start with the letter N, end with the letter A. It's a 5-letter company. I'm not going to tell you the company, y'all make a guess. Okay, so it's N something 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 A. So I'm going to share a little bit more on that company. I think there's potential coming up. Okay, and of course, this company is going to release earnings. So I'm going to share a bit more insights coming from the earnings and coming from the overall take on the company itself. So be sure, if you want to know what company this is and how this company can potentially make you very, very good money, okay, moving forward, All right, be sure to actually join us next Sunday for our Market Watch episode 26. Nvidia. Okay, maybe. All right. So with that, all right, thanks everyone for joining us tonight, and most importantly, stay safe, invest safe. And for those of you who have yet to start investing, okay, I will be doing an advertisement right at the end of this Market Watch. Okay, so if you have not started yet, okay, feel free to actually join us. Okay, if not, opportunity will just keep running away. If not, thanks everyone, and have a good night. Have a good week ahead as well. Bye-bye.